Hey Money Council family, welcome to another episode on our social media platforms with our investment series around Shari'ah Investing and Islamic finance with our guest in the studio, Abdulaziz David from Shari'ah Asset Management. And we've been chatting about in the previous episode around what is Shari'ah Investing. What we'd like to focus on in this episode is now looking at Shari'ah Investing and how it compares to its competitors and its peers in terms of conventional investing, whether someone that is appealing to invest in a Sharia compliant investment, would they be compromised in a certain way? So do stay tuned as we'll be unpacking this with Abdulaziz David. Hey Money Council family, welcome back as we've introduced the topic around Shari'ah investing and comparing that to investment peers in the conventional investment space within South Africa, and also looking at it from a global perspective. With me in the office is Abdulaziz David from Shari'ah Asset Management. He is the head of research and portfolio manager of the Islamic funds. So welcome, Abdulaziz, first of all.
Yeah, thank you, Shukran, Adnan.
So Sharia funds and investing in Sharia compliant funds has kind of always had this sort of misnomer, I'd say, or probably misconception also, that because of its rigorous investment process, that it underperforms compared to its conventional peers, other investment funds operating in the same market, whether you're looking at unit trusts or mutual funds as it's called, globally, pension funds, etc. So perhaps starting off there.
Yes, okay, thank you for that. I think the biggest misconception is firstly that Sharia funds, because we have what they call a limited universe.
Yes.
Bearing in mind from our previous episode, we talked about the business activity of companies and the fact that we don't invest in companies that cause harm. We didn't really unpack that into a great degree. But if you think of the alcohol beverage sort of industry, if you think of the gambling industry, even banks, conventional banks, because they are lending institutions, those are all industries and institutions that Sharia compliant investments can't invest in. So clearly, I mean, the concept of a limited universe is true. However, I would say that we more than compensate in terms of, if one looks at it holistically, that South African mutual funds or in unit trusts can invest both locally and globally. So our universe is much bigger than just a JSE or the South African stock market. And as a result, we can compensate for the lack of diversity in the local market. And then the second and more fundamental question, which is what you've sort of alluded to, is the fact that there's this misconception, and I do think it's a misconception, that Sharia funds underperform conventional funds because of this limited universe. And I've spent the last 10 years trying to rectify this misconception, because I do think it is a misconception, and certainly we can back it up with our numbers. I mean, if you look at our Islamic equity fund, it's outperformed the conventional peer benchmark over all periods, be it 1 year, 3 year, 5 year, or since inception as well. So certainly, again, we can both walk the walk and talk the talk, because our fund has definitely outperformed. And more importantly, I think if one looks at it in a South African context, one of the best performing stocks in our market actually is not Sharia compliant. So conventional fund managers have had the luxury, as I call it, of almost passively investing in the biggest stock in the market, which is NASPAS. And even with that luxury, we've been managed, and we haven't had a single NASPAS share in our Sharia compliant portfolios from the inception of our funds up till today.
Wow.
And over that period, NASPAS, I think, has gone from a price of 57 Rand, and it went over 4,000 Rand at one stage. So certainly, it's been the best performing stock by a long way. And similarly, there are other stocks that are not compliant, which have done exceptionally well as well. And so even with that perceived handicap, our Sharia funds have been able to outperform. And I think it comes down, again, the secret sauce is effectively very direct and very active approach to investing, both in terms of the research that we employ, but then also the portfolio management that we bring to bear on our funds as well.
So, I mean, when you said Islamic Equity Fund, that's primarily investing in shares.
Yes.
We do understand that there are other asset classes or other investment assets that one can invest in.
Yes.
And that would obviously speak to your balance funds and then also looking at your income funds.
Yes.
So, I mean, how is those compared to also its conventional fund peers?
Yes. I think a very good question. And before I answer that question, I need to say this because, you know, there's another misconception out there that Sharia funds are only for Muslim investors.
Yes.
Anybody can invest in a Sharia fund. And in particular now, I think now is an opportune time for non-Muslims to also switch and diversify their portfolios into Sharia funds.
Yes.
And the reason for that is my answer to your question, is that if one looks at, so as you've rightly said, we've talked about equity performance. If one looks at the non-equity classes, which is traditionally it would be your bond market. Now, in a Sharia context, we would look at the sukuk market. I don't think time allows us to really delve into what is a sukuk and the various types of sukuks, but let's just call them Islamic bonds for ease of reference. So the Islamic bond market in South Africa is nascent. It's very, you know, small. But one of the key characteristics that we've already seen in terms of sukuks versus conventional bonds is a lack of volatility that you would normally find in the bonds. Because bonds are traded, what you would find is that, you know, when interest rates go up, so a bond price is inversely related to the interest rate.
Yeah.
Because your coupon rate is fixed, if the interest rate goes up, it effectively means the bond price falls. So that phenomenon means that bonds are actually much more volatile in terms of their pricing, and actually much more volatile than sukuks as well.
Yes.
So if you think of what they teach at university in terms of finance, to combine a volatile asset with one that is more stable, which is a sukuk, gives you a much better outcome from a total portfolio point of view. And that's effectively what our Islamic Balance Fund has delivered. So we've been able to buy and invest in sukuks. So typically there's a profit sharing ratio, and that profit share is fixed.
Yes.
So your sukuk gives you a very linear upward sloping line in terms of the return, whereas bonds do this and can be all over the show. And now if you add equities that also do this, you get a very volatile portfolio.
100%.
Whereas a Sharia compliant balance fund or even our income fund, which has a mixture of equities and sukuks, you get a much more stable upward sloping sort of return profile as well. And that's why I would again encourage, not that I'm trying to market our funds here aggressively, but effectively there is an opportunity for non-Muslim investors and Muslim investors to say that actually compared to a conventional balance fund, a Sharia compliant balance fund gives you a much better profile in terms of that risk-reward trade-off, especially from a volatility point of view as well.
I think at the nub of it, it's really about diversification and smoothing out that volatilities over time. Also, I mean, when you've touched on sukuks, and not to get into that topic specifically, but I think also with sukuks or Islamic bonds is that it's physically backed by an asset. Is that correct?
That's right. So we did an exercise where we looked at the performance of, and at that stage, I mean 2008 during the global financial crisis, how the sukuks, especially global sukuks, performed relative to the conventional bond market. Now at the time, what we saw is that there was a big spike up in yields. So bonds massively sold off during the global financial crisis. And the same thing happened last year with our COVID impacts. Whereas sukuks, because like you rightly say, they're asset-backed, the values are much more stable. At most sukuks lost 1 or 2%, the ones that did lose money at that stage. But that's 1 or 2% on a 100% or $100 investment. Whereas your traditional bonds would have lost 30 to 40%. If one looks at what happened in Europe, for example, those bonds lost 50% to 60%. So definitely because of the asset-backed nature of sukuks, your volatility and your risk of loss is substantially mitigated compared to a conventional bond as well.
This leads me now to the next sort of topic or subsection to this conversation is a lot of older investors that are in their pension years, they require an income. And obviously not being heavily weighted in the equity market where there's more volatility, you then sort of look at an income generating type of fund. And sukuk is obviously a fundamental component to that. But I do know that the Kagiso Islamic Income Fund has also done, or the High Yield Fund has done also really well in these times.
Yeah.
Let's talk about that, especially for for the pensioners that are
Yes.
looking for income.
Yes. So very good question, because our fund was launched about 2 years ago. So it's a fairly new fund. It's a new kid on the block. And what is interesting is that for calendar year 2020, the big COVID year,
Yes.
it ranked third out of 100 funds.
Wow.
So, these are not, in fact, there are very few Sharia compliant funds in there. The vast majority of those 100 funds are conventional bond type money market funds. And our fund ranked third out of the 100 funds. And the reason for that, again, as you've rightly said, is that our Sukuk profile and return sort of has been a lot more stable in the last year. And coupled with the fact that we've been able to invest in very selective equities. The fund is allowed a maximum of 10% in equities. Those equities have also done particularly well as well. So certainly for people that are in retirement, that are looking, for an income, they should first speak to their financial advisor, of course. But the profile of our income fund, or our Islamic high yield fund, as we call it, is that it pays a quarterly dividend.
Yes.
And that's a mixture from the sukuks that we have in terms of the distributions that we get there, coupled with the dividends that we received on the equities that we have in the fund as well. And on a total return basis, it's really done very well. I mean, if you compare the return of that fund to a benchmark like inflation, for example,
Yes.
it's outperformed inflation by a factor of 2 to 2.5 times over the last 2 years as well.
So you mentioned also the Islamic equity fund and the balance funds are able to invest outside of South Africa.
That's right.
We understand that the South African stock market is it's a drop in the ocean compared to the investment opportunities outside of SA.
That's right.
You've also introduced a global equity fund. I mean, how has that panned out compared to some of its peers?
So a very good question. I think relative to Sharia compliant peers, we're holding our own. Unfortunately, the benchmark there is also, it's a conventional peer benchmark. And if one looks at globally, the big, what we call the FANG stocks have done particularly well. So it's been a tough market for us. Firstly, some of those stocks are not Sharia compliant, but also, a lot of them have done particularly well. And we've had, valuation concerns around them. So in absolute terms, the fund has done decent. It's effectively done about 11 to 12% in dollar terms. Unfortunately, the rand has taken away some of that luster, given the rand strength that we've seen over the last year and a bit. But certainly, I think relative to other Sharia funds, we're holding our own on the global side of things as well.
I think that would be an interesting discussion in our next few episodes, where we look at some of those FANG shares, Facebook, Amazon, Netflix, etc., and why they perhaps not part of the Sharia investment universe. Thank you for that, Abdul. I hope you found this episode also valuable around the conversation and understanding of how Sharia compliant investments compared to the conventional peers. Do like and share the episode if you found it valuable, and click on the bell for further notifications to our next episodes. Thank you for watching, and until next time, thank you. Bye-bye.